Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, May 23rd, 2008. Well, a beautiful day outside here on the start of this Memorial Day holiday weekend. Unfortunately, in the markets, it was not nearly as bright and sunny. The overall indexes have continued their decline, and what a decline it's been. From that double top M pattern with a tail on the top as of Monday and that mega reversal, we've seen a massive drop in the markets just in 4.5 days, really. All right, since Monday around noon, 1 o'clock, when that reversal began, it has been an ugly drop. You saw the Dow down 146 points today, the NASDAQ down 20, and the S&P down about 18.5. All across the board, basically 1% plus drops in the indexes. And this is what we've been talking about. Those of you that go back and have been following the videos, the main theme of all last week before this week was Wall Street versus Main Street, and how there was a divergence there, and which one was right. And we said, listen, we've got to be honest. Wall Street's gotten ahead of itself here. Main Street has it more right, and sure enough, this week we see that coming to fruition. How Main Street's now pulling down Wall Street in the right direction. Now, it doesn't mean that we're heading back to the lows from, the Bear Stearns time. Not necessarily. And now, could we do that? Absolutely. But it doesn't mean we are. We're going to take it one step at a time here. We knew this decline was coming. We've been right on top of it. A lot of times we see a pause day right before a Memorial Day weekend type long weekend on very light volume. That did not happen today. However, we did see a bounce or a hit of 50 moving averages, or we're close to the 50 moving averages on a lot of these index daily charts, and that may indicate that we need to kind of have a little bit of a pause or bounce early next week in the markets. Now, it doesn't mean, again, it's going to happen, but the charts are indicating that, and we'll show you guys that when we get into the daily videos. All right, so again, the indication is that we are setting up for a small little bounce, just kind of that sideways, slightly up pattern where people kind of need, the stocks have fallen very hard here, and they need to get a little bit of a bounce. So let's go into this daily chart, guys, and see what we can see. On the daily, volume was very light, as we did say yesterday would be. We thought it would be more of a flat day, pause day, setting up for a next week decline. After we got a couple pause days, maybe today and Tuesday, Wednesday, but now it's looking like we may have done that today, and now we may see that pause or bounce early next week. So we'll kind of see, and I'll show you how we think and why we think it's going to be. And also, I want to show you off of yesterday's video, we had talked about a bear flag formation on the 60-minute ES and SPY charts and how that came to fruition today. In any case, you can see here trading along here, markets were basically flat, and right at the open the selling began. And it was pretty much non-stop all morning. Then we got into this lighter volume afternoon. Look at how light the volume is down here, and you can see that it was a sideways trading pattern. So you basically had drop, bear flag in spirit of bear flag, drop in spirit of bear flag, and drop. These are all little bear flag patterns that we follow, and we have our calculations that pretty much set up where it should go. And sure enough, as you can see, at a drop and a bear flag pattern, drop, same type of pattern there, and drop. And then you got a little bottoming tail here. Bottoming tails, guys. Notice here, no bottoming tail. All right, you have a little tail there, but that's not a bottoming tail. For a bottoming tail to exist, you need it to be in the close of the candle, be in the top 25 or better of the candle. And again, here you didn't have it. But now all of a sudden you do have it here, and you have it here again. And obviously off of that you get a little move up, and then you get a little bit of a negative candle pattern, and a little bit of a sell again. And then close to what looks like a positive engulfing candle down here, you see the red candle, and the green candle basically eclipses it. And off of that you get a nice little bounce up right into the 20. Again, we fall, get a little bounce up into the close, and then right before the close you have hard selling again as volume picks up and people unload positions into the long weekend. So a very, very interesting market today. Even though it was light volume, it turned out to be a little more active than we anticipated, without a doubt. Now let's look at the daily charts, guys, because this is where things get really interesting. Intraday is good enough for us that are traders and everything, but really when it comes down to it, we want to know where's this market headed come next week, come the next couple weeks, and this is what we have to look at. Number one, before we get into that, I'm going to flip back here. I want to show you the 60-minute and how we knew that the bear flag formation, and I want to show you that bear flag that we pointed out yesterday. Okay, here you're looking at the the 60-minute ES chart, and we pointed this exact chart out yesterday, and I want to show that to you guys. All right. So really what we've been seeing here, we drew this line, all right, going back from this point all the way here, okay? And we said, guys, when this breaks, notice how we hit on this yesterday. And please, if you want to really learn from these videos, please go back and note that on the video from yesterday. We drew this line in, how you had from this point to this point. You kept on tapping on this line. And we said in yesterday's video, when that line breaks, you're going to see another decline in the markets. Whether it happened today or not, we weren't sure as of yesterday, as we thought it might be a pause day. But obviously, as soon as it breaks, I mentioned yesterday, then the play is to the downside. And look at that, really right at the start of the day, you see a break, another in spirit of bear flag, and another drop down, and then a sideways pattern here. So that worked out to a T. You can see it's a trend line, and it broke. Again, you had a mini trend line formation right here. You can draw it underneath, again, those little bottoms of the 60-minute, a break, and sideways pattern. Now, all right? Now, this is not really setting up for another drop here that we can see yet, so we'll have to monitor it again early next week on Tuesday when the markets open. Again, Monday's the Memorial Day holiday, so the U.S. markets will be closed. Now, here's the daily, guys. This is the daily ES chart. We'll look at the SPY. They look almost the same. You can see the move up, obviously. Here's Bear Stearns over here. That was the bottom we had called. Then you had the massive move up. Here's the area where we believe the top was in. You saw the pullback to the 20, the bounce to a double top with a little tail on the top, and then the massive selling. Now you have a move all the way down here. Now we're hitting off the 50 moving average on the ES. So keep a close eye on this. This should be support right here in the near term. Ultimately, we don't think it holds, but does that mean that we don't have a small bounce or a consolidation pattern? No. You guys know by now, following these videos, how consolidation works off of main fall before the next leg down should happen. You could get a nice little bounce up, that's possible, or you could get that pause in it, or hell, I mean, they could just break it right down and go lower. So, again, the odds are now facing off of the support that you have a sideways or up move coming, just a small one for a few days, and then we'll reevaluate off this 50 moving average. Let's look at the SPY to confirm that. Same thing here. You see the tail on the top, the M pattern double top right here, double top right to there, and now the fall. And we're just about, we didn't actually hit the 50 today, so that may mean that we need to gap down on Tuesday, or maybe just touch it. It's so close to it at this point that it could be viewed as in spirit of, which means essentially it's done it. It's really within a couple ticks of that 50 moving average. And again, a 50 moving average is just a compilation of averages. It doesn't mean that it needs to exactly hit that moving average or not. Sometimes they pierce, sometimes they don't, and so forth. So in any case, watch for this support right here. Watch for maybe a sideways pattern, somewhat like this, or a little bit of a bounce up in this range right over here, and some consolidation on Tuesday possible. And that would be our best estimate of what would go on next week. All right. Again, the last couple days, lighter volume, and again, we have the holiday volume kicking in. Tuesday should be light volume as well, as people are going to take a little bit of an extra vacation or take that little bit of a hangover come Tuesday. All right. Just a side note, we've had some interesting moves in some stocks here. I mean, there's been some killings on some stocks. Stocks like DRYS, Dry Ships. Look at this fall from the top. Unbelievable move down from the top. And granted, this was well oversold, and we had assumed that we had believed that this was going to drop, and so did it. But nonetheless, a major drop on that stock. It'll be interesting if we get a bounce in this market. Does this retrace to the 20 moving average? CPSL, we talked about this in the chat room today. A major run-up on earnings. They had great earnings. A retrace back to this gap window. Notice the gap window here. That's always support. And look at it. Hits it today and rallies back. And we talked about this early in the chat room this morning in the Intra Day E-Mini stock chat at around $5 and, I don't know, 60 cents. Today it closed at $6.60 off that gap window. And that's the power of technicals, guys. And this is all stuff that, anyone believes in fundamentals, we respect it, but the technicals will lead the way always, and that's how we've been so accurate on our calls. They're just so much more accurate than fundamentals. In a bull market, fundamentals are great. In a bear market, they don't mean a whole lot because there's just so many things changing out there. In any case, that's an interesting chart there. We also had a sympathy play off of that Sutter, CUTR, which is just like CPSL. And you can see here on the daily, we mentioned that it broke and pierced this 20. That's a bounce indicator, and you can see intraday, by the end of the day, it closed back up. What a nice move towards the end of the day. Had it fallen all the way down, but at the end of the day, it followed CPSL up. And again, a few solars bounced as well. Look at SOLF. The fall here over the last few days got a good bounce. So there's some stocks out there that are really moving. I mean, the giant moves left and right. and it's really been fun, no doubt about it. The market's been an active market the last few weeks. Great day trading market. I've done more day trades in the last probably 2 to 3 weeks than I had all in throughout January and February combined. So it's been a fantastic day trading market. In any case, also keep an eye. Apple was upgraded to the Goldman Sachs conviction buy list, so it did get a bounce today. Watch for a possible bear flag formation as it upticks a little more. You may see it kind of come up this way, especially if we kind of pause in the markets. Once the next leg down does start, you may see another big pounding down on that, but it does look like it may have a little bit of legs going into the next few days. Baidu, Google, both weak again. Look at the fall on Baidu and the M pattern. Here's BIDU. Look at that M pattern and then the fall off there. All right? All right, folks, that's about it for me today. Have a wonderful holiday weekend. No market on Tuesday. Come join the Intra Day E-Mini stock chat, and you won't be disappointed. So much information there, guys. You'll grasp so much in such a short time. Join the Swing Trade Alerts. Contact us for details. Take care.